Good day, everyone. Welcome back. I'm Ruben Torrens, and today I will share with you another calculator. This one will help you to design the basis of your retirement income plan. And to design your retirement income plan, well, you need to know how much money you need in retirement, how much income you will need. And to know how much income you will need in retirement, you need to know how much income you need now in order to calculate that. And this requires very basic calculations, just additions at the beginning, but by the end it increases in complexity. But don't worry. So you don't have to run any complex calculations. Everything happens in the background. You only have to enter numbers, and it will guide you step by step. And this calculator will be ready for you to use by the end of the month, hopefully by the end of March. So no more talking, and let's go into the calculator. Let me show you how this thing works. Everything starts with a simple budget, just a personal budget. And it seems like simple, but every time I ask my clients to give me a budget, to write a budget for me, so to understand the situation, they procrastinate, they've never done it. So I created this tool that it makes it easier and if you allow me to say this, fun to do. So what do we do here? What do we have here? We have a personal budget of a detail of your monthly expenses. At the present, today, how much you're spending, and how much you will spend on the same item at retirement time, once you retire. And I have this one pre-completed because if not, it will take forever. So I did this for a client of mine, a couple that are both age 55. Actually, they both turn age 55 this year, and they want to retire by age 65. So they're 10 years from retirement. Let's see what happens. They do not own a property, so they do not own their own house, and they pay rent. They pay $2,312 in rent, and in today's dollar, at retirement, they will pay the exact same rent. So the fees, they only have utilities, $332, and will remain in today's dollars. The same utilities, they both use a cell phone each, for which they pay combined, they pay $55 each, so $110, and will remain the same at retirement, and the cost of internet will remain the same at retirement. So in their housing, they're spending now $2,832 per month, and they will need the same amount of money in today's dollars at retirement. We're going to get into the future later on. So stay with me. Then we go to daily living and daily living expenses. They summarize everything into groceries because they feel that they go to the grocery store and they buy everything there, and they spend about $780 every month. And now we get into transportation. They pay for the car. They have one vehicle, one car loan that will be gone by retirement, and their car is fairly new. They said that they're not going to change the car, and when this car is gone, they will use Uber. They're not going to use anymore, they won't buy any other vehicles. For gasoline, they will spend the same amount. But as you can see here, they have car payments now, but they assume that they won't have any car payments once they retire. So on the total for transportation, they will have a lot less at retirement. And we go on through every topic: entertainment, recreation, how much they spend, now on a retirement, education. While they're done with their student loans, they're done with their kids, they don't spend any money in education right now. Personal for clothing, everything detailed. Financial obligations, here we have another difference because they have credit card payments, but this is going to disappear by retirement time. And they save $434 per month into RRSPs, while eventually once they retire, they will start using RRSP money instead of putting money into an RSP. That won't be an expense anymore. And we're going to get to the grand total at the end, which today, at the present, they're spending $6,831 per month, and the retirement they will need in today's dollars. If they happen to be age 65 today, they will need $5,344. But of course, they're not 65 today. So, however, before doing anything else with this. So the monthly income needed in return will be $5,344. But they will have government pensions. So we need to deduct from here, from this need, what their government pensions are today, again, because government pensions are indexed to inflation every year, so we're safe in calculating today's number. So we will deduct $687 per month each that they will receive from All Day Security. Don't worry about these numbers. When this is loaded on our website, I will explain in detail how to get to these numbers, where you have to get these numbers. And they will be published on the website anyway. They will not qualify for the guaranteed income supplement initially because they have $1,500. One of the spouses have $1,500 per month from an employer pension, and they will also receive $1,100 and $500 each from a Canada pension plan. So when we deduct all these amounts from the money needed at retirement in today's dollars, today, they will need an extra $870 per month. So this is the money that they will have to supplement with their own savings. So this $870 per month is a total expenses per year of $10,440. And of course, this is today's money, and this couple is age 55. So if they need $10,440 today, but this is going to happen in 10 years from now. See, the number of years to retirement here will be in 10 years from now, and they assume an inflation rate over the next 10 years, an inflation rate per year, an average of 2%. This is the number that they told me. You can change this number. We can say, well, we have an average of 4%, then the future value will be higher. But they asked me for 2%, and they will need in 10 years from now, instead of $10,440, $12,726 per month. Okay, per year. So, well, they need $12,726 per year, but how much money do they need? Well, if they need to withdraw a payment of $12,726.30 every year in order to supplement their government pension, all the pensions that they have, so, well, how long they're going to live? Well, they assume they want to plan their retirement income up to age 90. If they retire at age 65, the number of years in retirement will be 25 because 65 to age 90 is 25 years. So they will receive, they need to withdraw $12,726 per year for 25 years, and in the future, after the 25 years, they expect that account to be zero. So they won't leave anything to their heirs, to their kids to inherit. And this money will be invested, and they assume that they will earn a 4% rate of return. If all this is true, so they will need to save by retirement time $198,811. Now, if they want to leave, let's say you want to leave something for your kids, you want to plan, run the same plan, and have, say, run 25 years into the future, and in 25 years, after withdrawing all this money, you want to have $100,000 or whatever amount in order for your kids to your kids to inherit. Well, then if you want to have this $100,000 instead of 198,000, you will need to save $236,000 by retirement time. And this is how much you really need to save for retirement at whatever age you want to retire. So you will be able to enter your own numbers into this calculator and have the basis of your retirement. But this is only the beginning. This is only the foundation of your retirement plan. But and now you know how much money you need to save for retirement. But what is that money going to be? What is it going to come from? Is it going to come from? Is money going to be the product of rental income, interest, RRSPs? Is you will have a tax-free savings account, dividends, capital gains. There are many forms of income and retirement, and they're all different. And this is what you will be able to determine with the following calculators. With the calculators, they calculate income. Now, with this number, you will know that this is the money that you need. With the information that you need that you will have from Canada Pension Plan and all the security, then you will enter all this information on the calculators that will show you in the next few days. So as we move along towards the end of the month, and in those calculators, you will be able to determine, oh, in my case, it will be better to have a tax-free savings account only. In my case, we'll be able to have a mix of tax-free savings account or an RRSPs. So, oh, I thought that my rental income will be great, but it's not that great. So I need to make changes here. All that you will discover it with the new calculators. In the meantime, don't forget to leave me your comments below the video. I'm really interested in your feedback and to see if I'm doing a good job designing these calculators. I'm trying to make your life easier. Don't forget to subscribe to the channel. If you have any questions, you can drop me an email to the email address on the screen, and it will be detailed on the description of the video below the video. And and other than that, thank you for watching, and I will see you on the next video.